Hey guys, welcome back. Good Thursday to you, June 3rd. Got GME ticker over here, we've got UONE over here, and the SPY overall market right there for today. Slowly melting down today on the overall market. It opened up pretty low, down almost 1%, and then it just had this big green candle coming up, but then it's fighting that moving average and just bleeding back down. I'm still bearish on the SPY, so I think it's going to keep coming down. GME kind of moves on its own, of course, from that. Sometimes inverses, sometimes with it. But today, the shorted stocks, yeah. Looks like the shorts won today. Look at extended hours here really quick. We can see kind of what happened. So here's AMC, had a crazy rally yesterday, up 100%, and then it even rallied after hours, all up $77. Got attacked down. They finished, or they offered shares, I don't know how many million, but I think that's part of that, and probably people taking profits, and maybe more shorts coming in, reason for the sell-offs, and GME kind of just doing the same thing with it. The shares on iBorrow today are basically nil. So they had 300k, and then this morning at 9 they had borrowed all of them. It's just been bouncing off the bottom here for all day. 543.30, yeah. So when stuff's going down, it's easier for hedge funds and market makers and market manipulators to go with momentum because people are scared, and so yeah, when something's going down, they want to take advantage and capitalize on that and go down with it. So yeah, GME came down quite a bit today. Big dump here. I'm gonna go over the option plays we did because I was actually ended up day trading this thing. It's just getting kind of choppy, and pretty good environment for day trading, even though I don't really do that. But just with options, not my shares. Still hold my shares. Yeah. So if we let's see. I haven't actually looked at it with extended hours on the hourly lately. Typically I do without extended hours because that doesn't hold as much weight. On the hourly, it's not great. It's bearish. We've got red underneath the 9 moving average. MACD's crossed over. We weren't able to make a new high. Also, we can see MACD divergence. I believe that's, I don't look for those too often, but this one was pretty obvious to me. You look at the high on the MACD here, it was right here. And then the high on the MACD right here was here. So two things. One is this high on the MACD was lower than this high, which doesn't have to mean it, but that's one sign that it's going to be bearish. And then another thing, though, is that the stock price, the share price was lower on this higher MACD than it was here. So the stock price is higher here when this is lower, and it's lower here when this is higher. So the saying I kind of came up with when I was learning about MACD was the MACD is always right. So when I see it doing this, even if the stock price goes up when the MACD is coming down like this, it doesn't always, but that is kind of a bearish signal, I believe. As well as the RSI divergence we have here. So right here you can see this high, 294. Our RSI, which is this number right here, was 64, and then the other high here. Well, actually no, yeah, on there it's not 59. Yeah, so that's actually fine for taking those tops. There's not a divergence there. Before I was kind of looking at the top over here, and see, I don't use RSI divergences too much, but I think actually that is what you would do. You would look at the high on the RSI, not on the stock, because the high on the RSI here, this is kind of a top. You did have another top, but if you count this as the top, RSI is high here, higher than it is at this RSI peak. At this RSI peak, we're at 286. This one we're at 241. But the RSI is lower here, and I'll have to look into that more, but I believe that's the way you do the RSI divergence, or you take the peaks of the stock price. At any rate, other indicators are looking bearish for it, and it started to run up today. It had kind of a bump here, a pretty good bump. It's starting to sell off into close. And then there was a tweet, a Ryan Cohen tweet about Sears, and that shot it up more. And at that moment, actually, it seemed like AMC, because AMC has been kind of running the show lately. It seems like GME's kind of following AMC just recently. But then, see, GME right here broke away from AMC, so that was right here. AMC stayed flat below the VWAP. GME had the tweet from Ryan Cohen, bumped up above VWAP, and then once they both started going together right there with some volume. So I'll show you my entry and exit points on GME today. We had calls from yesterday that we bought right around here. Actually, we kind of bottom ticked it. Those things shot up like 100 and I think 80% was the top, which typically my percentage on options, 180 is good, but you know, the big ones I'm excited about are like 1,000% or more than 1,000%. However, the options are so expensive on here, and I put a lot into it, because those were kind of my short squeeze, basically my mother of all short squeeze options. They were naked, and they were expensive, and I got a lot of them for how much they were. I don't usually spend too much on options just because they're risky and they have an expiration. But I did here, just in anticipation. Actually, where did we get it? I got it right here. Yeah, right here is where we picked it up. So those up 180%. We were up like 8 or 9 grand on them, and it was looking good, and then it kind of sold off. This was when all that crazy stuff happened yesterday. Kept running up, and I think we're up like maybe 100% by the day's end. You can't trade options in after hours, so when it dumps after hours, there's nothing you do. You gotta wait till it opens. Opened here. I just held it, and it kept dumping down. I'm like, okay, well, maybe it's not going to. Maybe I should get out of these, because they're super far out of the money. Those were 540 options, and instead of showing you on the E-Trade, I'll just tell you about it for now. But when they're that far out of the money, this kills premium. So at this point, they were down to like 25%, I think, at the low. So that was like a $6,000 drop, or even more. But so I kind of decided to get out of them. Looking at the chart, and then seeing AMC, and then AMC offering shares. I was like, okay, this, you know, I can buy back in. When it's a larger position like that, it's gonna be harder to hold. So I had patience, and I waited until like here to sell them. So I waited off after the bounce. I wasn't sure, and then kind of around here I sold them. So sold out. We still made, I think, like 25 or 2,800 on them. So we were still up on it, which is kind of nice that they held up that much premium. And then waited, and I was wondering if I should go back long on it. And then, let's see, right, where was that? Yeah, right here I actually bought back into the same calls. They were cheaper, so I mean, as far as day trading, it was a smart move, because I was able to buy back in at a cheaper price. And then we had this nice volatility jump, and that just bumped those things way up. They were up like 60%. The ones I bought right here, they went up 50% to here, and then around that percentage up here. And then I actually sold them back out. Where did I sell them? Like here, for like a 30% up. So that was another couple grand gain, which is nice. I've got too many day trades though on my E-Trade, so that's not nice. But I'm just kind of showing you the way options, just the amount of leverage and what that means for them. So it swings fast this way and fast that way, and with it, just with these two candles, that made my options, because from where I bought them here, or maybe even here actually. Yeah, I bought them here. They actually stayed about even through all this. The options did. They didn't gain any value even climbing up here, just because it was too slow. There's no volatility or no velocity. Stayed even all through here, and didn't do anything. I mean, I probably could have sold them for the same amount, but there was some slippage on buying in and selling. How you're going to get slippage also, which is basically the cost of doing business. But then these two candles, the things shot up 50%, and then even after it slowed down, they were still up 30 or 40%, just because of all the velocity and the volume and the momentum. So I kind of got lucky on this one, because this would not have been a good trade to buy those naked options here when there's no velocity. I mean, it's a good time to buy naked options when there's not velocity if you're anticipating velocity. I was kind of guessing at that point. I was hoping it's going to go up today, tomorrow, and start the gamma squeeze, mother squeeze, whatever. But if I was expecting a slow grind, I should have gotten debit spreads, something that doesn't give me time decay on such high IV options, because when they're naked, the IV on them, if it's high, it's going to get crushed just with time, especially with the shorter dated ones, and these for next Friday. So I could have done it with this Friday, but just in case this thing kept going into the weekend, I didn't want to be short dated. So anyways, that was kind of like my day trading on GME today with the options, and it worked out. I mean, we're down from yesterday's high, but I think we're still up, I don't know, six grand maybe from it. And AMC, I actually opened up a debit spread on AMC today. Where was that? I opened it up just like right around here. Yeah, on one of these dips. It was a debit spread. It was at 90. I bought a 90 call and I sold a 95 call. So it came down, it came up, and then up here, actually I sold out of it. Right after we kind of hit this peak, I sold out of it. That one as well as the GME one. So that one I think we made $300 or $400 on. And yeah, and then my kind of, I mean, according to the charts, both kind of bearish. And maybe it's just a consolidation. I don't know. I mean, there's a gap to be filled in here maybe. Or maybe it needs to consolidate. I mean, AMC is still overbought in the daily, so this thing might have a kind of a red day and consolidate before it runs up. I think next week's going to be a pretty big week for GameStop, whether it's up or down or volatility or the gamma squeeze or the beginning of the short squeeze. I was never thinking it was going to be this week, and then we had this. I mean, we did think from this week, from the failed to delivers, or no, that was last week. What was this? Yeah, that was last week. So yeah, I was never thinking this week was going to be anything. It was really last week, but there's kind of a continuation on the failed to delivers, which happened back here. I think this was the failed to deliver date, and then we had this continuation from it. So I was kind of looking at this thinking maybe we'll get this run up to, which would be 500 in this case. And I guess it's possible we could tomorrow. I will have missed a lot of the move if that happens in the extended hours. But yeah, so this was a failed to deliver, and then it continued. And then this was a double failed to deliver that crossed over, but we didn't see the same price action. So, and that might have been AMC, kind of part of its catalyst. I think so initially. And all the other shorted stocks that are running, you know, there's like 15 of them. They just keep popping up. Ones that I don't even remember from January. But yeah, so short term, I mean, the thing is on the daily, like candles, it looks good. It looks like we're coming up. We're making higher highs and higher lows. So that looks good. The MACD is still good. The RSI is, it's a little overbought. And if you look at our resistances, I mean, we've kind of got this resistance at like 279, and this area is kind of where there's resistance. But then if we look at we're doing the RSI divergence. If you're looking at the highs here, look, see this high, this RSI high? It's 76, the RSI, and then this candlestick is 262. This high on the RSI is 72, and this candlestick's 294. So that would be a divergence in the RSI, which would be a bearish reversal. But also, actually, if we're looking, we have diminishing volume, which is also a sign of a reversal, that this trend won't keep going. So maybe it'll be selling off a little bit next week into earnings. I think earnings are on the 6th. This Tuesday? That's 6th? That's Sunday. 9th, right there. Wednesday. Earnings are on Wednesday. Shareholder meeting, I think, is on the... No. Wait, earnings are on the 9th? 6/9 is earnings? I thought that was a shareholder. Same time. Earnings and shareholder meeting, I think, are on the same day. So, we might sell off... Typically, GameStop sells off after earnings, whether they're good or not. So I was kind of expecting us to be somewhat high by Wednesday and then it sell off. However, maybe they'll just sell off. Maybe we'll already be low, and then maybe we'll rocket on earnings. Maybe it'll be a new thing for GameStop. New moves. I'm gonna go over our trades really quick and show you what we did. This is a little bit wrong. So it says we're down 5,800 today because that's I mean, yeah, technically because we were up that much more yesterday. I don't like how these other charts do it. They're so annoying. If we look at on today, this is 28. This, I don't think this is quite right, but anyways, I'm not even gonna go through our history. But that's pretty much everything, so I'll just check. Oh yeah, it's kind of important actually. I set up a kind of a longer term trade. I got there's a huge chlorine shortage right now. There's a chlorine plant that burned down like months ago. There's only 3 of them in the United States. One of them burned down. COVID had a lot of people at home and had a lot of people thinking, I want to buy a pool, I want to own a pool. They built pools because they're at home all the time. So you have demand there. Summer season coming in, you get demand. Burn down chlorine factory, you get more demand because there's less supply. Everything's in a shortage right now as far as supply chain is concerned. Chlorine prices are skyrocketing, and possibly you won't even be able to buy it this year. An alternative to that is saltwater system, where you create your own chlorine. Hayward is a company. They manufacture pool products, saltwater systems, pumps. I don't think they do chemicals. I'm sure they might not even sell it, but this is kind of a saltwater system play, I guess, and just pools being high demand for the summer as well as COVID. This covers earnings by a long shot. I have 134 days on this. I got 4 of them. If these lose a lot of value, I'll probably scale into it more. There's also Pool, which is another ticker that has I was just reading about Pool. This is a more broad exposure to it. Distributor of pool swimming supplies. They've got a lot of different companies in the pool space. And then a good one also was, what was it? Leslie's. I actually bought shares of Leslie. They had a call sweep today. I was gonna get options, and then had that call sweep, so they got really expensive. This is a direct-to-consumer pool and spa care brand. Products under the brand Jacuzzi. Hayward. This company offers its products under the brand name or brand Jacuzzi Hayward. So they're selling all this stuff: natural chemistry, Waterway, Pentair. So they sell stuff. They just sell products. Basically an e-commerce company, it seems like. They sell pool chemicals, pool equipment. That pool chemicals thing, that's where it's just the prices are going insane. If they're out of them, like, yeah, that'll hurt earnings. However, the prices are already insane. So this Leslie might be a better play for earnings, just because they have. I don't think necessarily the chlorine manufacturers are going to. They're going to make a lot, but I don't think they can have a whole lot of. They're going to have a whole lot of swing on their pricing wholesale to the companies that sell their chlorine. The retail that sells the chlorine, though, they're the ones that fluctuate the price. Hayward might have some exposure to that also. Alternate natural sanitizers to lower chemical usage. That's saltwater systems. Usage, energy, efficient pumps. And it's funny, actually, these both kind of IPO'd pretty recently, Leslie and Hayward. Let's see. Manufacture and sell low flow control products. Yep, that's all pool pump stuff. LED lights. So this one, I got options on it because, yeah. So there's other the 2 other manufacturers are publicly traded, but they're such big companies. It's not like direct exposure to chlorine per se. They're up quite a bit too. I think Olin's one of them, and then I think Oxy. Distributor of chemical products. Yeah, so they also do they do a lot of different stuff. Hydrochloric acid, hydrogen. So could do that one. Occidental, I think, is the other one. Petroleum, so this is oil and gas, but then they also do the chemicals that make chlorine, so I think they make chlorine also. But this is such a broad segment. This is probably a good one for the long term, honestly. This is one of those DFV plays, I think. I think he probably has this in his long term. But yeah, so that's the exposure I got for that. I'll probably scale into it with different companies. So far, I've just gotten shares of Leslie's. calls in Hayward that cover earnings. I got these all the way out the money, $35 for October 21, and it's actually pretty. Yeah, that's not. I mean, this is recently IPO, and it's shot up. It's almost doubled since IPO. So 35 really isn't, to me, it doesn't seem too far, but especially not for that amount of time. So those might become crazy. That might become a crazy play. Let's see, Hayward's, and then the SPY call credit spread did that today. It's at 419, 420. So SPY basically has to close below 420 by tomorrow. Max profit's 573 on that. I'm bearish on the SPY, but I don't. I typed in bearish. I don't have to be that bearish. I just have to think it's going to close below a certain amount. Thank you, credit spreads. So I think it's coming down. Or what, 419? So here's 419. So I mean, it's close now. If it takes a little reversal, this will not be worth anything. We'll be losing money, but I'm bearish on it. Same with Tesla. We called Tesla out a couple days ago, a couple videos ago right here. I opened up a bearish play on Tesla. Tesla has since dropped down. I didn't need velocity for my play though, as a credit spread. With the velocity that we got today on the bad Chinese news on Tesla, you could have bought puts and done really well. My play was just basically, I think it's going to close below this by a certain date, but not predicting velocity. This velocity would have worked better with another play. However, our Tesla play has done really well. This one is a $852 profit, and looks like this one's going to expire worthless, which is what we want when we're selling premium. We want it to expire worthless because we received credit when we opened it. So I received the credit, and then I want it to expire worthless. If it doesn't, I have to buy it back, and when I buy it back, that's basically the difference between buying it back and the amount I receive for credit is going to be your loss, or the amount of basically that'd be your debit. Subtract that from that, and you get your net credit, your gross net profit. Yeah. Anyways, this one will be fine though. It's gonna be fine. So that'll be nice. And that's by tomorrow. I could close it out. It's already hit 98.59%, but I'll let it keep going. For those that don't understand credit spreads, I'm sure you have a perfect understanding now. Yep, that's what I got for you. And long term today looked good. Rocket shot up. Rocket shot up right here, and I sold some of my calls. I sold one of them, and I wish I sold more, of course, now. But yeah, then it flattened out. These were actually positive. Seeing that crazy swings today. They're down 91%. They were up 30% just on this shoot up right here. Should have sold all of them. See what happens tomorrow on that. I'm also in UONE, as I said earlier. That's this one. This thing's gone crazy before. It's got a year-to-date high of $54. Or that was last year, I guess. And right now it's just broken out on the daily chart. We're breaking resistances. I traded it before the other day, and I got out, and I actually got back in because it's still breaking. I did the trade from right here up to like here, and then it continued to go. This thing's jumpy though. It's volatile. It's not very safe. You kind of got to monitor it. So I did this one right here, and then I got out here. Then I just got back in like here. So we'll see what happens. Oh, it's not on this account. It's on E-Trade. But thanks so much for watching, guys. Sub up, like up, comment down. Happy money sticks around. Follow us on the Twitter. And that's at Happy Money YT. And we have a Discord.